Good afternoon, everybody. Now, in the UK, where I am, a big bank is in very big trouble, and that bank is called Metro Bank. It's not the biggest bank in the UK, but it is a high street bank, and it's the only challenger bank, a challenger to the old banks which have been established on the high street for over 100 years, to open in recent times. It started up in 2010, and it was the first new high street bank with a physical infrastructure with branches on high streets and town centres to open for 150 years. But now it is in trouble. Now, if you remember earlier this year, there was the start of a bit of a banking crisis in the United States, but somehow people have put a cap on that, and it's sort of gone underground or settled for a little bit, but there are still obviously big pressures in the global banking sector. If you remember, in March, three fairly big, not the biggest, but fairly big, medium-sized banks went under in a single week in the United States. There was Silicon Valley Bank, there was Silvergate Bank, and there was Signature Bank, all collapsed. And soon after that, a much, much bigger bank in Switzerland, Credit Suisse, collapsed. And it was only saved, well, I mean, not the bank wasn't saved, it was taken over by UBS, the other big private bank in Switzerland, and only UBS taking over what was left of Credit Suisse stopped contagion from spreading, which it would have done and spread throughout the world. That was March. Then in May, there was another medium-sized, big to medium-sized bank in the US went under. That was called First Republic Bank, and that was taken over by JP Morgan. And then there seemed to be a halt to banks going under and reporting on these things for a few months. But now this has all flared up again in the UK with Metro Bank. Now, they've got themselves into an awful lot of trouble, and they are trying to raise £600 million in order to plug a hole in whatever hole that there is. Now, I don't know the ins and outs of it, but obviously they're in trouble and they need to raise this kind of money. But the question is, as soon as a bank signals that it needs an awful lot of money to keep trading, is it going to get that money? Because if you're just an ordinary person, you are not probably going to sink your money into something that might soon be going under. The only sort of people who might do that are banks that are much, much bigger, that have got multi-billion pound capitalizations and want to, take it on to stop contagion spreading to them. I mean, that would be a motivation for a much bigger bank, a global bank, to come in and take it over. So I don't know if that is going to happen or not. We shall see. But certainly the numbers which people are talking about today are quite astounding. That at the height of its success, it grew quite successfully from 2010 to 2018. It grew to a market capitalization of £3.5 billion. That was what it was worth on the stock market. But from 3.5 billion, it's gone down now to just 65 million. So it's lost 98% of its value on the stock market since 2018, in 5 years. And it seems like, looking it up, it's had this problem before. The value started to go down when it needed to raise £350 million in 2019 because of another situation. It didn't have enough money to keep it going. I assume cash flow or something like that. Must have raised it because it's still going here in 2023. But now it's got itself into an even bigger problem. And what I'm hearing, now this is unconfirmed, but I am hearing reports that people who are customers of Metro Bank, who are trying to access their funds either online or on their app, are currently not able to do so. Now, I'm not a customer of Metro Bank, and thank goodness for myself. I'm sorry for you if you are and you're not able to access your money. Obviously, in the UK, there is the Financial Services Compensation Scheme. So if you have less than 85,000 in a bank account in any bank that is backed by the scheme, and Metro Bank is, because it's regulated by the Financial Conduct Authority, then you will get that money back eventually, provided that not all the banks collapse at the same time, because there isn't enough money in the compensation scheme to pay out for everybody in every bank if they all went under. But if one bank goes under, well, you probably will get your money back in a few weeks or a few months' time, up to £85,000 per person, not per account, but per person. So if you have 2 or 3 accounts in the same bank, they amalgamate the total to work out what you might get back. So that's the situation. I do know people who bank with Metro, you know, and it's going to be a difficult time, and we don't know what's going to happen. So obviously, this chimes and rings a bell with what happened in the last financial crisis of 2008. But one of the first banks, if not the first bank, to go under globally was Northern Rock, which was a UK bank. And before Lehman Brothers and Bear Stearns went down in the USA, Northern Rock collapsed in the UK in 2007. It was bailed out by the government to save the funds of people, you know, British citizens who had money in that bank, and also there were a lot of people who had mortgages with Northern Rock at the time. So this, I wonder if this is a similar thing and a similar situation. I don't know, but this is a fast-moving story, and people are starting to talk about this, and I hope that this isn't the start of a big banking crisis and contagion, but it's something certainly to keep an eye on. And I've said before, in videos before, make sure you think very, very carefully about where you put your money and you keep your money. I'm not a financial advisor. It's totally up to every individual person to make the decision what they do with their money. But in the light of things which are going on, it's worth thinking about what you do with your money. And perhaps the time to think about that is fast approaching.